Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazaar Morning Call. As always, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me, Prashant and Nigel. And guys, before we talk markets today, there was so much drama. When has an address at the UN General Assembly been as long? And from I was a realtor, I could have renovated this building, to faulty teleprompters, to escalators not working. It was all happening yesterday in New York.
Absolutely. You said it right. What does this remind you of? Escalator suddenly stopping. Huh?
I don't know, Nigel. What have you been doing on escalators?
I was just thinking, when earlier, if you were playing really loud music on a terrace party and if the cops or someone was down, what do? You just leave the last floor lift open, so they have to walk out and they take longer to get you.
There you go. So.
But that's on a lighter note, but yeah.
That's amazing.
Well, I think iconic or I don't know call it, but of course, very, very combative speech in terms of what he said at the UN as well.
And the relevance of the UN, right? He kept challenging the relevance of the UN, saying, you guys have not stopped any wars.
But that's the thing about it. I was thinking about this, right? At the memorial service for Charlie Kirk in the US, President Trump, when he made that speech, always in character.
Yeah.
Doesn't, no matter what the occasion, always kind of sort of hammering on the points that he wants to make.
That's true.
It doesn't matter where he's speaking. So let's just sort of take it from the top in that sense, right? So this is what you got. U.S. equities, which ended lower. S&P was down 0.5%. The Nasdaq ending about 1% lower. So there's a little bit of a pullback, which we've seen last night. Fed Chairman Jerome Powell essentially saying that policymakers face a challenging situation in balancing risks to inflation and the labor market. Remember, he spoke last week extensively, interacted with reporters, etc. There was a 25 basis point cut. There's been a fair bit of debate whether this is a one-off and this is the start of an easing cycle. There was only one voting member, who voted for a 50 basis point cut. That was Stephen Miran, who's Trump's man, who's recently come on the FOMC. But otherwise, and we kind of sort of put out, a lot of people spoke yesterday as well, all of them cautious, and I think this kind of sort of adds to it. Powell warned two-sided risks mean that there is no risk-free path to cutting rates. Basically, you cut rates, economy can overheat, asset prices are at an all-time high across the board, and I think these are concerns which are well understood by the market, but of course, this is coming from the Fed chair. 10-year yield, it's actually gone up a little bit, down about 4 basis points last night, so 4.1. Trump, and at that UN speech, essentially calling for Western allies to limit their intake of Moscow's Russian oil. Oil prices on fears that maybe, there will be a hit to supplies as we go forward, about 2% higher. Brent oil at about $68 a barrel, where we ended. He, of course, also blasted European countries, the United Nations in general, over immigration, climate, and of course, said the climate and the climate change is a hoax, as he said many times before. So a pretty combative speech overall. And I think no softening of stance. If you thought with, 2-3 quarters into this presidency, President Trump, in a gathering like that, perhaps will tone down in terms of his stance, his approach, absolutely none. Now, I just come to India here, right? Yesterday there was the market, which didn't do very much, at least as far as equities are concerned. So it started with last Friday. The pause started last Friday. Monday was a pause again. So cumulatively, we pulled back about 250, 275 points. And yesterday was a pause. So that's the index. But the rupee, it basically blasted higher. Dollar rupee blasted higher. Rupee was lower. So, almost went to about 89 in a single session. So that's the close, 0.5%. I think we'll track this closely today as well. The issues are the same. It was, of course, the trade issues with the U.S., but over the weekend, there was, of course, also the H-1B issue. And it's not very clear that whether this is like just a negotiating tactic or this is the opening salvo and opening up an entire new area, which is services, in an issue which has so far been limited to be dealt with goods. So, and I think there are serious concerns in that sense. So we'll see. You want to take the positive side of it. I mean, you can say, well, the rupee is down, what, 5%, 6% this year? And for fresh and positioning is very low in India. So foreign investors who come in now, you basically are getting a 5% discount. You're getting a 5% advantage for fresh money, which starts to come in now. So that's the other way to look at things. But we'll see. It's a chicken and egg. I mean, most other markets around the region in Asia are getting foreign portfolio flows into equities. India is not, and I think that's the other reason why you've got the rupee weakness, which has been more pronounced. We'll talk more about this as we kind of go forward. I'll just close out with the levels here. So the Nifty held the 38% retracement level on a closing basis at least. We need to close above the 20-hourly average. By the way, the 20-hourly is above the 40-hourly exponential average. And that level is 25,247. We need a closing above it to say that, well, this recent pause is over, and maybe we kind of sort of continue the near-term to slightly medium-term trend, which has been, of course, this pullback from the lows of 24,400. Support is yesterday's low, 25,084. Is that number. Nifty Bank closed in the positive region yesterday, positive territory yesterday. Resistance here, 55,835 and 56,156, very, very near-term levels. And of course, for the support for the Nifty Bank, that stands at 55,159, which is the low. So those are levels. GIFT Nifty will give you a quick sense of how we're likely to start. We'll pick it up from there. 60 points lower once again. What are the F&O stats looking like? Nigel has walked across with exactly that. Nigel, good morning.
Well, morning, Prashant. One of the factors that have been plaguing the markets in the last couple of trading sessions is institutions have turned net sellers. So if you look at the FI net sell number, that's overpowering what the DIs are putting in. So institutions, they mildly net sellers close on 8 to around 900 crores or thereabouts. Moving to what the FIs did in the future space, not too much. 1,000 contracts were added on the long side, 1,000 contracts were covered on the short side. They still continue to remain net short with 86% of their positions on the short side. And in absolute terms, it's around 1.4 lakh contracts on the short side. What about the FI action in stock futures? Well, the previous trading session, they added quite a few shorts. In yesterday's trading session, in fact, they added more longs than shorts. In fact, they added 2 longs for every 1 short position. Some part of that as well could be an arbitrage that's taking place out there. So that's about the FI action. Moving to the options data. Remember, yesterday you had the weekly expiry that played out as well. So that added an element of volatility, particularly in the second half of trade. We were down 100 points and then we recovered considerably as well and ended mildly in the red. So the two strikes, the bulls and the bears will feel that they have an equal say in the range for the market, because the 25,300 call, 17 lakh shares getting added there. 25,200 put as well, 17 lakh shares getting added out there. And the premiums in the vicinity of around 100 rupees or thereabouts. So it appears in the near term, we're in this range that we're looking at. So on the downside, yesterday's low, which is at around 25,085 and 25,050. That's the important mark you want to, don't want this to break on the downside. While resistance, the recent highs at around 25,331. And going by the options data, that's the mark that you're looking at in terms of a resistance mark. So for the time being, we're in a bit of a range as we speak. The Nifty Bank, that's been holding one end up. Even in yesterday's trading session, it did well. Good recovery is what we saw from the lows of the day, and it ended at around the 50 DMA. So that's the important mark you're looking at in terms of the Nifty Bank. It needs to continue its good form and lead the way from here on. Besides the index, we could see some bit of consolidation. What I would like to see is the breadth of the market improving, because the number of stocks advancing yesterday were way more than the number of stocks declining. So today, even if the index does see some sort of a consolidation, though I think that if it's a 70, 80 point downtick, at some point of time, we could see a good recovery intraday on the Nifty. But the breadth of the market as well should improve. That's what makes portfolios feel quite good. And just one stock, yesterday, GMDC, the stock did see a big move in trade. The volumes are very, very massive. But in terms of delivery percentage, it was less than 10%. So just keep an eye out on this name. Sometimes you see these moves on the street starts factoring in opportunities they believe for the next 4 to 5 years. But in the near term, it'll be interesting to see what comes out of it. Delivery relatively lower in comparison to what you have seen. So keep an eye out on this one.
Okay, all right. So those are the top cues from the F&O space as well. Markets across Asia, by the way, they are a little mixed, because markets are, passing over the comments that the Fed chair made yesterday with respect to asset prices, where he was responding to a question and he went on to say that, yes, at least in the US, and I'm quoting exactly, he says that equity prices are fairly highly valued. And he was responding to a query whether the Fed is looking at the way stock prices have run up, and that was the context. So anyway, we've got a mixed picture across Asia. Japan is seeing some profit-taking. Markets like Taiwan, Hong Kong, they're still on the higher side. Taiwan's actually, slipped now, but the Hang Seng is still holding on to some gains. Let's just pull up the GIFT Nifty and the implied open. So after taking a bit of a pause over the last 2 days, we're bracing for another 60-70 point start on the downside. With that, let's get to quickly the equity call of the morning. Herald van der Linde of HSBC says that Asian markets are up an average of 20% in 2025 so far, despite strong selling by foreign funds. He says this is due to the support from domestic retail investors, especially those in mainland China, sitting on piles of cash. He says India now appears attractive on a regional basis, and they move to an overweight stance from neutral. So HSBC turning positive on India. Well, Mark Franklin, Deputy Head of Multi-Asset Solutions Asia at Manulife Investments, is with us. Mark, great to have you with us this morning. Thanks for joining in. So the U.S. president seems to be feeling that, not the U.S. president, beg your pardon, the Fed chair seems to be feeling that equity prices are a little overvalued in the U.S., but that's where the money has been going. And, of course, some of the regional markets here as well, whether it's Taiwan or Korea. Do you see any signs of a shift in fund flows towards Asian equities?
Good morning. Yes, we've seen year to date an allocation of flows towards Asian equity markets, albeit driven by selective stories, whether it's Korea as a result of the clearing up of the political uncertainty, Taiwan as a result of its leverage to the semiconductor and AI themes, or as a result of Hong Kong, China at the start of the year as a result of discounted valuation. So it's more driven by bottom-up stories. But in aggregate, yes, there's been an increased allocation of flows into Asian equity markets over the last 6 to 9 months.
All right. Hi, Mark. Good to see you, Win. What about India? You heard the call that Surbhi just made with regard to HSBC. They have gone ahead and they believe that India is now all set to catch up, and that's why they've changed their stance. What about you? A market that's underperformed in the last 12 months or so is India. In the longer duration, well, we have compounded at a very, very good rate. But do you think it's time now for Indian markets to catch up, given the kind of measures you've seen both on the fiscal as well as on the monetary front?
Yeah, if you look at India, it's really kind of gone through a time correction over the last 6 to 12 months. It's effectively gone sideways, trading within a range. And by extension, it's underperformed other markets as well. This is really symptomatic of a situation where 12 months ago, Indian valuation multiples looked somewhat extended. The growth story was intact. And what we're seeing now is sort of a digestion of those strong gains over previous years and a rotation of ownership in the market. So eventually, whilst the long-term growth story remains intact, that time correction will eventually give way towards a renewed pulse to the upside. But in the short term, I think we see an absence of immediate catalysts for the Indian equity market. And so we remain neutral at Manulife for the time being.
What about gold, Mark? We had briefly spoken about that. You said that you're continuing to remain positive the last time we chatted. That's just going from strength to strength. Now, there's two views out there. One is that there's a bit of a bubble forming in gold. There was a call even at around $3,000. Now it's around $3,800. And the other view is that, you rather allocate money to gold if you're looking at safe investments rather than putting in some of these bonds globally. Your view on gold from here on?
We remain structurally positive on gold. What you're seeing is a reappraisal of gold in terms of its place in portfolios, not just for retail investors, but critically also institutional investors and asset owners in the case of central banks. If you look at median weightings towards gold in portfolios, it still remains in the very low single digits percentage-wise for those types of investors. So we definitely see continued progression to the upside in terms of increased allocation. And then behaviorally, there's been a shift as well, as I mentioned, with central banks. They're increasingly looking to gold as a diversifying source and holding of US dollar denominated reserves away from nominal treasury bonds. And I think that's also a reaction not just to the geopolitical and the inflationary backdrop, it's also a reaction to this paradigm shift in government's attitudes towards running fiscal deficits. In the case of the US, it's now bipartisan assumption that you can run widening fiscal deficits on a pro-cyclical basis. And gold is seen as effectively a haven against excessive quantitative and fiscal stimulus into the economy, because it gives you a store of wealth in a situation where the monetary base becomes somewhat pressurized by this ongoing acceleration of money supply and fiscal deficits without consequence.
Absolutely, and that explains why there are a lot of calls for northwards of $4,000 on gold as well, perhaps exactly for the reasons that you mentioned. Mark, very quickly, before we wrap up, that neutral call on India that you just alluded to, Just tell us a few factors. I mean, why is it that you're not getting incrementally more positive on the market here? We've had the GST cuts, the income tax cuts, so on and so forth. But what makes you still keep a slightly more cautious or conservative stance in India?
Yeah, our tactical views at Manulife are predicated on an assessment of 4 different pillars. So macroeconomic, sentiment, fundamental, technical. Just very briefly, on the macroeconomic side, relatively mixed economic data in terms of the progression to the upside or to the downside. In terms of sentiment, you rightly pointed out on your show earlier that foreign institutional investors' sentiment towards India is somewhat dampened. And then from a fundamental perspective, earnings revisions and valuation multiples very much in the middle of the pack at the moment. And then finally, from a technical perspective, as I mentioned, we've kind of been going through a time correction here. The market's been range bound. What we'd want to see is upwards pressure breaking to the upside of that range with increased volume, and that's not there at the moment. So across those 4 pillars, our conclusion is for the time being, India remains neutral.
Middle of the pack, as you're calling it. Got it. Thank you very much. Good to have that context. Thanks for joining in this morning, Mark.
All right, that's an interesting chat as always. Let me just quickly now run you through what's lined up here over the next 2.5 hours or so. So lots of interactions coming up. 8:35, you'll hear from the management of the Lodha Group to discuss the company's FY26 outlook. So Sushil Modi, Director of Finance of the company, will be with us. 9 o'clock, Nikhil Negani of Bernstein for a discussion of the power sector stocks. 9:20, Gautam Shah, founder Goldilocks Global Research, is our market master today. We talk about levels. 9:35, exclusive chat with India's Steel Secretary Sandeep Poundrik. Following that, we'll have a new IPO, Jain Resource Recycling, 1250-odd crore IPO. Opens for subscription today, and it's the economy with Latha discussing the impact of H-1B visa fee hike and the fallen rupee with Samiran Chakrabarti of Citi, Chandresh Jain of BNP Paribas.
Well, time to slip into a quick break. We've got a lot of stock-specific action to track for you today. We'll get to that in just a bit in our special Top 10 segment, but we're looking at Swiggy, Infosys, HCL Tech, SBI Cards, NDR Invit Trust, Dilip Bilcon, Bajaj Electricals, Minda Corp, and VIP Industries. So 9 stocks reacting to positive news flow, while AkzoNobel will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. We've got the markets in focus for you with, of course, our top 10 list of stocks. As always, our research team is standing by with what you need to know in terms of single stocks and prominent, significant news flow. Guys, good morning. Vinny, let's start with you. Swiggy in focus, something we've spoken about in the past, but I think the news on Rapido finally out.
Absolutely. The news of Rapido's stake sale is finally out. Now, let me take you through the details first. Now, Swiggy will be divesting around 12% stake in Rapido. This is going to be in 2 parts. One is an approved sale of 10 equity shares as well as 1,63,990 Series D CCPSs, which is going to be sold to Porus's company, that is MIH Investments. That is going to be for 1,968 crore rupees. The other is also going to be a sale of around 36,000 Series D CCPSs, and this is going to be to Westbridge, one of the companies of Westbridge. So that is going to be for 430 crore rupees. So overall, this divestment, like we said before, is something that is already spoken about in Q1 FY26 that highlighted that they will be divesting the stake. Important is the cash on books. As on 30th of June, the cash on books was around 5,300 crores. Now, with this stake sale of 12%, that is going to be of around 2,400 crore rupees. So overall cash on books is going to be 7,750 crores at the end of Q2 for the company. Now, what will this mean? More cash on the books means the cash burn rate at which they were going in Q1 was around 1,300 crores. JP Morgan is saying with this cash on books, they can survive for more than 6 quarters. And obviously the cash burn will be reducing further. So obviously in terms of improvement, we could see coming in overall for the performance of Swiggy, and valuations are still very cheap versus Zomato. So that is something we'll watch out for, but green is what we are seeing today for this call.
Got it. Thanks a lot for that, Vinny. But let's hop across to Rima. Tech has got knocked back in the last couple of days, but Rima's going with green on Infosys and HCL Tech. Rima, tell us more.
Well, I'm not sure how the stocks will move, but let me first run you through the news on Infi and HCL Tech. So Infosys announced the expansion of a long-term collaboration with the Swiss telecom company, and HCL Tech too has renewed and expanded its transformation agreement with a Swedish commercial vehicle manufacturer. Size of both the deals is not known, but these are existing clients. The scope of their partnership has been expanded. But secondly, why I'm watching, IT with suspicion today is because the Trump administration has proposed changing the H-1B visa selection process. This is not a proclamation. It's a proposal that the Trump administration. So earlier, H-1B visa selection was done by, it was random. It was lottery mechanism. Now what he's saying is that if the demand exceeds the cap of 85,000, which every year it does, then we need to move towards a weighted average system. Basically, give a higher weightage to higher cost employees. People coming on higher wages. So on the whole, what this will do is increase the cost of sending people on H-1B visas, because only if you're going to send them on a higher H-1B wage, only then will you get approved. So this is a proposal right now, but I think considering that, Trump was, trying to, plug the gap and, this whole H-1B visa, increasing the visa cost to 100,000, I think this will be an additional blow that Indian IT may have to deal with. It's a proposal as of now, open for discussions, 30 days public comments. Let's see how it goes.
Okay, all right. So no good news on the H-1B visa front, at least, including from this proposal. Rima, thank you for that. Let's move on to Gaurav. He's looking at SBI Card today. SBI Card, I think the latest spending numbers are in. Gaurav, how do they look?
Well, yes, for the month of August, it actually looks good for SBI Card. So let me take you through the numbers. At system level, the spendings increased almost by 14%. But for SBI Cards, the system, the spendings that increased almost by 25%. So SBI Cards were ahead of the curve. As a result, the market share, they have gained 50 basis point market share. If we compare it with its peers, we have HDFC Bank who gained around 43 basis point of market share and IndusInd Bank who gained around 30 basis point of market share. So definitely SBI Cards is leading here. When it comes to new card addition, at a system level, around 7 lakh cards were added during the month of August, while for SBI Cards, around 70,000 cards were added. When we talk about total cards in force, at system level, we saw the growth was at around 6%. And here also we saw SBI Cards actually growing higher than the system at around 10%. So definitely the numbers look good. In fact, Morgan Stanley says that this could be because of the corporate spending. We saw in the last year that declined, but because of the regulatory changes. But in this month, they are expecting this to increase. So definitely in terms of number, we are looking at a good set of numbers for the month of August for SBI Cards.
Okay, all right. Thanks a lot for that, Gaurav. Going to Vivek, then he's tracking a large trade as well as some big action that we saw in yesterday's trade. Morning, Vivek.
Well, good morning. That's right. So first, let's have a look at the likely block deal that's expected to happen in today's trading session. We accessed the term sheet last evening, and this is on AkzoNobel India. Just ahead of the acquisition of AkzoNobel India by JSW Paints, one of the promoter entities, Imperial Chemical Industries, looking to sell up to 5% stake in the company. The total size of this particular offer is at a little over 740 crore, and this particular floor price is at a 4% discount to yesterday's close at 3,260 rupees per share. Now, there is a lockup of 30 days on the residual stake by seller. And remember, this particular entity, Imperial Chemical Industries, held a little over 50% stake at the end of Q1. Expect some pressure in AkzoNobel in trade today. The other stock that we mentioned is the NDR Invit Trust. It's an investment trust, so it's a unit that actually was purchased. Radhakishan Damani, as per the disclosure last evening, bought 87 lakh shares in this particular entity at rupees 115 rupees per unit. And along with that, Aryaman Junjunwala Discretionary Trust bought 58 lakh shares at 115 rupees per unit.
Okay, all right. Got that, Vivek. Thanks very much. Let's quickly move on to Sudarshan. Sudarshan's watching out for, I think, Minda Corp and VIP Industries, where there seems to be a little bit of a management change. Go ahead, Sudarshan, tell us more.
So starting with Minda Corporation, it has released Vision 2030 documents in which it has given the targets on the important metrics of first talking about the revenue. It expects an increase of nearly 4 times to rupees 17,500 crore from the current level of rupees 5,100 crore. On margin front, it expects an increase of almost 100 basis points to 12.5% from 11.4%. Net debt to equity ratio, it believes that it's likely to decline to 0.3 times from 0.6 times. And on ROCE front, it's likely to exceed 25% from 20%. Now, Talking about the sectoral, it will focus on passenger vehicle, in which it believes that its contribution is expected to rise to 25% from 14%. At the same time, it will reduce the contributions from two-wheelers, three-wheelers and commercial vehicle. Talking about the VIP industry, recently you know that multiples had acquired majority stake in the company, and because of that, company has announced of the changes. It has appointed new managing director, and the name is Atul Jain. He will replace Neetu Kashirmaka, and Atul Jain was previously associated with Samsung Electronics, where he was heading consumer electronics, and also he had held certain positions in Coca-Cola, Godfrey Phillips India, as well as Bharti Airtel. And also, as per agreement, Multiples Group have right to nominate majority of the directors, and it has appointed Renuka Ramnath as non-executive chairman, and Dilip Piramal has resigned as chairman.
All right, so thank you very much for that. So VIP, keep an eye out on that one. Dilip Bilkon, Bajaj Electrical. So the next we want to focus on. Upasana is here with details on these. So Upasana, morning.
Good morning. First up, let me start with Dilip Bitcoin. Now, the company through its JV, that is DBL PSP, has declared as L1 bidder for a project worth nearly about 1,115 crore in the state of Kerala. And the time period for this is nearly about 48 months is what the company has indicated. Next up is Bajaj Electrical. The company has approved acquisition with Morphy Richards, which is for the brand and intellectual property rights in India and neighboring region, from Glen Electric for a consideration of nearly about 146 crores. Hence, this stock will also remain on our radar today. Now, the company has been manufacturing and marketing Morphy Richards products in India since April 2002, and this strategic move is expected to strengthen its position in home appliances and even consumer electrical portfolio. So this certainly bodes well for the company.
Okay, all right. Thanks a lot for that, Upasana. Well, let's do a quick recap of all the top stocks we highlighted for you. Swiggy, Infosys, HCL Tech, SBI Card, NDR Invit Trust, Dilip Bilkon, Bajaj Electricals, Minda Corp and VIP Industries. Well, AkzoNobel is the stock that we will be tracking on the negative side. Well, that's about the top stocks we're looking at. But Sudarshan, well, he joins us for more. He has gone through a lot of brokerage reports this morning, joining in to give us a sneak peek. Sud, morning.
Morning, Nigel. So first one is Maruti Suzuki. Goldman Sachs has upgraded the stock to buy and increase the target price to rupees 18,900 per share. It is given the reasons because of which it has upgraded the stock. And first one is potential pickup in the entry-level segment. Second, company has resumed new launches after a gap of almost 3 years with Victoris SUV and e-Vitara, and also the favorable exposure to pay commission in upcoming auto demand cycle. And on the risk front, also it believes that against peers, it is less exposed to those risks. And because of all these factors, it expects 5%, 12%, 9% volume growth in FY 26, 27, 28 respectively, versus industry's growth estimate of 4%, 8%, 9%. And also it has increased EPS estimate for FY 26, 28 by up to 12%. Second is CESC. Nuvama has upgraded the stock to buy, and here target price is rupees 200 per share. It believes that renewable energy growth has solidified, and company aims to double profit to rupees 2,800 crore over FY 25-2030. Remember, company in the interview with CNBC-TV18 also had talked about the same. And it looking to increase renewable energy addition by 1.2, 3.2 gigawatt by FY 27-29 and has a target of 10 gigawatt by FY 32. And new solar manufacturing initiative that company is looking to take by FY 28. And considering all these factors, it also believes that valuations for this stock are looking very cheap at current levels.
Okay, all right, Sudarshan, got it. Thank you very much. So we're going to keep all of those stocks on our radar, as well as the brokerage comments that have come in today. Let's take a quick break on that note. We'll come back on the other side, discuss some of these interesting stocks and more fundamental stock ideas with Deven Choksi of DR Choksi FinServe. Also, in a bit, we'll have the management of Lodha to join in to talk about the company's FY26 outlook. Welcome back. Before we get to some stock ideas for the day, let's quickly get to a corporate conversation. Now, we have Lodha developers in focus. There have been several news points. One of them, of course, was the recently signed MOU with the Maharashtra government. This was for setting up data centers. It was a massive MOU, actually, 30,000 crore rupees for integrated data centers that they're planning to set up in Palava, which is just outside of Mumbai. But the more recent news development is this news of quote unquote fraud, and that's what the company itself is also calling it. And I want to actually start with that. This is one of the company's directors, Rajendra Lodha, which is, I think, a distant cousin of the promoter family. He has now resigned, and apparently there's a 100 crore rupee fraud that has been unearthed by the company, and investigations are underway. So let's just understand this in more detail. Sushil Modi, Director of Finance at the Lodha Group, is with us. Mr. Modi, thank you for joining in. Let's actually start with that clarification. How have you arrived at this 100 crore rupee figure? And how are you confident that the wrongdoing is limited to just 100 crores?
Morning, Survi. It's very unfortunate, the context that we are discussing. This is not something that we ever think of, getting into and talking about, because at the first place, we never even imagined that this is something that can happen in the company. So we are absolutely shocked and saddened and disheartened, to say the least, that this has happened, and that too it has happened from the person at a seniority of an executive director, which is even the least that one can expect. So it's a issue that that has transpired in the course of normal corporate checks and balances, where a director typically gives all his interest in various entities from a regulatory standpoint, and which is what, when we examine in the normal course for all the directors to make sure that the governance is of the highest standard, we realize that some of the entities, perhaps the names are missing in the declaration that has been given, and which is what made us to kind of seek greater information that why some of the informations are missing. And we got further shocked when we then being told that, this is it that is there. I am not giving any more information.
Sure. So, Mr. Modi, so let's take it step by step, because shareholders will need clarity, right? Let's go step by step. So this individual, Mr. Rajendra Lodha, he was not identified as part of the promoter group in the shareholding. I mean, was he? But I think he was a KMP, a key management personnel.
He was the KMP.
Yeah.
Any director of the company is a KMP by default.
Yeah.
Under the law. So, and which is what makes it even perplexing, right, and shocking for us, that generally any transaction in the company, any business that you do, if somebody is supervising or executing and controlling at the helm as much as director, generally those transactions are being considered with all the internal controls being in place to be the rightful transactions.
So, sir, how has this happened? Now, let's talk about the numbers. They're really important. I think the company said that the extent of the fraud, and you are calling it a fraud, right? The extent of the fraud is 100 crores. How have you arrived at that figure? And are you confident that it's only 100 crores? Or will you have to go for a wider, maybe even a forensic audit of some sorts?
No, you are absolutely right. Obviously, our initial preliminary observation basis the preliminary inquiry and the checks and balances that we did indicated immediate certain amount of wrongdoings, and which is what has got quantified to this number of 85 odd crore, for which we have filed an FIR. So you are absolutely right. That's a fraud that we ourselves feel that has happened. But nonetheless, the regulator has to finally establish it, and which is what the proceedings are on. And henceforth, over the course of the period, everything will get established in beat quantum, beat in terms of the severity and the modus operandi through which it was done.
All right. Mr. Modi, good morning. And unfortunate developments, but I think important to get that clarity. Let's just now talk about the other one, right? The government essentially signing a MOU with Lodha for a 30,000 crore rupee green integrated data center park. So is this, MOU and it's an understanding, how far out from an actual kind of scoping out and signing an agreement, sort of a binding agreement between now and when are we likely to see that? And just tell us a little bit about this project if you can.
So, Prashant, before we get there, just to clarify on the previous issue of this fraud, I would like to kind of, assure all the stakeholders that Lodha as brand, as a company, stand for the integrity. We are effectively, taking the leadership position in establishing various governance standard in our industry, starting from the giving the margins numbers under the underlying pre-sales and whatnot. So it is saddening, but nonetheless, we will make sure that if the situation has arisen, we will not look for the personality, the position, the seniority of the person.
No, Mr. Modi, absolutely, and it's good that you're placing that on record. I'm sure your shareholders will want to see that. But if you could just complete the other point that I was asking was, is there going to be a wider audit, a forensic audit? Investors will want to know if the damage is limited to 8,500 crores, or could there be more?
No, so obviously we can't completely rule out that whether it can be more or no, but that is a function of the forensic audit. You are right. So perhaps it will undergo the forensic audit, and and the outcome will be there. So that's will come out reasonably soon.
Got that. I think I think should we you want to talk about the data center thing, Mr. Modi?
Yes.
Yeah.
So on the data center front, Prashant, you rightfully pointed out. So what we have signed is the MOU with the Maharashtra government, which is, as you know, in our Palava, which is the large land that we have, around 4,300 acre. We started selling land for putting up the data center to the hyperscalers like Amazon, and recently we did the second transaction with STT. So we clearly see that all the right prerequisite that is required for the data center ecosystem development at Palava everything is in place, and which is what further got endorsed with this MOU, which means now anybody coming and putting up the data center gets further advantage in economics, including in terms of the electricity duty, the concession that the government gives under this MOU. So this is a perfect right location. Our aim, as you know, is businesses focus on residential. Data center is more from the standpoint of continuous monetization of the land that we have, the large land, and thereby creating a virtuous cycle for our residential ecosystem in and around Palava locations. We will continue to work on, but also it opens up another opportunity for us to potentially build the annuity stream of income that we are targeting. Our target there is not mammoth. It is more like 1,500 crore by the end of the end of the decade. So there lies a potential there. We may also think of doing some data center for ourselves, but otherwise it is more for selling the land to the various hyperscale scalar data center ecosystem provider, whom we sell the land and and thereby continue to create a good cash flow for the company on a yearly basis.
No, my only question is, you are basically just you were going to be providing land and kind of sort of development around it.
Yes.
You're not entering the data center business in that.
Not really, but it just creates an opening that to the extent of our annuity target threshold of 1,500 crore, if we wish to, at some point we may think of, but no, otherwise what you said is absolutely correct.
Okay. And just from business strategy perspective, Mr. Modi, I know it's 30 seconds is too short a time to answer, but say setting up a residential township, setting up a commercial building or a mall, vis-a-vis setting up a data center, how do the margins compare? And how lucrative is the data center business?
See, data center is more an infrastructure, right?
Yeah.
The digital infrastructure, and thereby the margins from that business can only be contemplated on a typical what any other infrastructure projects will give. It can be some bit superior as compared to any other infrastructure projects that one would think of, but not otherwise. So thereby there is no comparison. It will be dramatically different because we are not becoming a data center operator. We can construct and then put it to the Amazons of the world if they have to, and they can operate.
Yeah, so similar to the office business, more or less, similar to the commercial business.
Yeah, I would call in some way like that. Yes.
Okay.
But it'll be.
Got it. Thank you very much.
I'm assuming it'll be different, Mr. Modi, right? Because we're talking about a concrete box, concrete shell, and not. I mean, it's going to be limited to that for you. If you decide to go into that, and of course you then sell it to others to populate it with everything else which is required in that sense. But anyway, it's a different conversation. You're not thinking on those lines. You may think about it later, and we can maybe talk about it. Thank you very much for joining us. We're going to come back with the big movers on Dalal Street yesterday and how they stack up in terms of price and delivery statistics. Take a break. We're back.
Welcome back. Hope you're having a good morning. Well, a lot of stocks to talk upon. We have Deven Choksi, the MD at DR Choksi FinServ, who joins us on the show. Hi, Deven. Good morning and good to see you in. Let's talk about Swiggy. You know, they had that stake in Rapido. They've exiting, they're selling that stake for around 2,400 crores thereabouts. So they'll get some cash in their books. But I think the market had sniffed it earlier. But what's your view? You know, that valuation gap with Eternal does continue. So, how would you approach this stock?
Hi, Nigel. Good morning. Well, I think they are doing everything possible to build the balance sheet, I suppose. And getting rid of, some of the investments definitely, is part of that activity as it appears. Your observation is absolutely, to the point about the valuation gap between the Eternal and the Swiggy. In my viewpoint, Eternal long back, started correcting its balance sheet strengthening exercise. And Swiggy is possibly entering into that phase now. So it might continue for a while as we see it. Nonetheless, as a consumer, you enjoy both the technology platforms. That's not a challenge. But the fact is that the valuation-wise, Eternal stays at an elevated level. And that's where probably catch-up will have to happen through the balance sheet strengthening exercise as I see it happening now first week.
That's Swiggy. Deven, hi, morning. I don't know if you could hear our conversation with Mr. Modi of Lodha. Not really a question only on that stock or company, but in general, there are those who believe that the luxury end of the housing market is now looking a little tired. So, give us some sense, either the Mumbai-based players or Bangalore-based players, do you still have any preferences? Would you look at buying any real estate stock at this point?
Yes, Selvi, good morning. I find that the redevelopment part of the story is catching up very fast. So those companies which are basically picking up the business, on the redevelopment side, for them, the business continues because on one side, they relocate the existing owners into the same newly constructed premises. And on the other side, they don't invest money in the land bank. Firstly, the requirement of money is basically used for the purpose of development only. So that's where this model is working well in my viewpoint, in some of the cases. Of course, some of the larger companies do have the redevelopment kind of projects along with. But by and large, they are basically working with the land bank kind of a proposition, so that remains slightly expensive one. In my viewpoint, as long as you generate sufficiently high amount of margin on your construction activity, then probably you will be selling through smoothly, even if there is a tough situation on selling side as far as the premium housing is concerned. Fortunately, for the ultra luxury segment and the luxury segment, which is above the premium segment of housing, the business condition remains fortunately more rewarding. At least in the select pockets like Mumbai, you are finding that some of the companies like Lotus, they are doing a relatively better job compared to keeping that kind of a focus. So remain positive, but selectively on the real estate space.
Yeah, got that. Any thoughts on Swiggy? Deven, there are two bits of news. Okay, I think we did discuss Swiggy. What else? Where else are you finding action? I don't know if you track a name like BF Utilities, Deven. The story there is land. It's been for years. It was part of Nimesh's D Street chatter yesterday. Stock was up 10.5%. I don't know, any thoughts or... I'm sure over the years you've looked at it.
Yes, Prashant, I've always looked at the company and always found more disappointment looking at that company. Anyway, at this point of time, there is no particular viewpoint except what we keep on hearing about the land bank. But no viewpoint on a company per se, at least at this point of time.
Okay, let's put more stocks up, right? And this is what did very well yesterday, what moved basically, the big movers and the price action, volumes, deliveries, etc. behind it. Hormuz is here with exactly that. Hormuz, over to you.
Morning, Prashant. And we've been talking a lot about the auto names, but the ones that were actually making a mark in yesterday's trading session were the auto ancillary names. And take a look at these auto component makers, be it Subros, be it Automotive Stampings, Lumax Industries, Lumax Auto, all of them seeing gains of anywhere between 7% to as high as 15% in yesterday's session. And not just the gains, these gains have come on very strong volumes. Look at Automotive Stampings. It's a Tata Group company, and it's 12.5 lakh shares traded yesterday. The 20-day volume here is only 15,000 shares. Same is the case with Subros as well. Close to 45 lakh shares traded. The 20-day average volume is only 1.5 lakh. Well, Lumax Industries and Lumax Auto volumes are on the lower side, but of course they are still at least 2x of their 20-day average when you compare it to yesterday's trading session. Now, even on the delivery front as well, Automotive Stampings saw more than 1 lakh shares being marked for delivery. 12 lakh were traded, more than 1.5 lakh for delivery, and the 20-day average here is only 8,000 shares. The same is the case with Subros, almost 4 lakh shares marked for delivery, 20-day average being 55,000. Lumax and Lumax Auto as well seeing at least 2x of their delivery volumes as well in yesterday's trading session. Something's brewing in all cargo terminals based on the price action and the volumes that you're seeing over the last couple of sessions. The stock has risen 17% in the last 2 sessions. Yesterday as well, stock saw a 10% up move. The volumes yesterday were the highest since March of 2024, with more than 35 lakh shares trading in yesterday's session. The 20-day average here is only 2.5 lakh, and 13 lakh shares out of that were marked for delivery. The 20-day average here is only 1 lakh shares. Now, the stock this month itself, a couple of days of strong price action, and the stock is up 30% this month, which has already become the best month of this calendar year so far. And GMDC, we spoke about this on closing bell yesterday as well. The stock ended at a record high. Not just that, yesterday's volumes was the highest on record for the stock, with more than 5.5 crore shares trading. The 20-day average is only 1 crore, but this is of course after the fact that there has been a recent spurt in volumes. In the last 13 sessions, there have been 6 instances where there have been more than 1 crore plus shares being traded in a single trading day, and almost 50 lakh shares were marked for delivery as well. The 17.5 lakh shares being the 20-day average, and the stock is up almost 60% already in the month of September, which has made it the best month that the stock has had since May of 2009 for GMDC.
Okay, all right, Hormuz, thanks a lot for that. We'll keep an eye out on all those stocks today as well. For the time being, we'll slip into a short break. Come back, pre-open rates. We'll also get chatting with Sudarshan as well as Mitesh. They'll give us their technical calls.
Welcome back. This is, of course, Open Exchange. What, 1 minute to go for the pre-open session and 15-16 minutes to go for the market open. Sudarshan Sukhani is with us, and so is Mitesh Thakur with what they'd want you to do in terms of trades today morning. Gentlemen, great to have both of you here. Mitesh, how are things looking? Yesterday was flat after a 2-day pause. How does one take up things? I mean, there's the other thing which is happening, right? The rupee, which the dollar rupee went up sharply, almost at about 89. So that also is looming. One's not sure. For the year, I was just checking, it's down about 3.5% odd. That's in line. I mean, typically we see 2-3% kind of depreciation. We're at the end of the year. So hopefully this is it, or there is more. As I said, not very clear, but people are wondering whether that at some point will have a spillover effect here into equities. But purely technicals, how are things looking?
Good morning, Prashant. We maintain a positive bias saying that this pullback should be bought into. My initial feeling was that 25,150 should be it, though yesterday we got an intraday low below that. The closing remains above that, and the direction of the indicators and the averages is rising. So I think it's still not a negative sign, but we have hovering around this support level of 25,150, 100. I think it's important that we give a rebound from here. I think that will confirm that this support level holds. And once that happens, I would look at a retest of 25,500.
Okay, all right. Let's go across to Sudarshan then. Good morning, gentlemen. Sudarshan, what about you? How would you approach the markets?
Yeah, good morning. And Nigel, we have had a 2-week rally. And then on Monday, we said, okay, 25,200 is our cutoff point. If it goes below that, we have to make a risk call on the risk and we'll just exit long positions. That happened. Yesterday, my view was avoid the Nifty. There is no clarity on what it's going to do. I'm sorry, but today the same view continues, which really means I don't have a trade in the Nifty. And this is not unusual. Sometimes the market doesn't give any view, and that's okay. We just have to accept it. So I would advise focus on stocks, completely forget about the index today.
Okay, all right. So more about the stocks than the index. So in that case, gentlemen, let's get to the stocks. Sudarshan, what's on your list?
Well, Alchem is a buy with a stop under 5,500. Hind Petro is a buying opportunity with a stop under 418. NMDC is a buy with a stop under 77. And State Bank is a buying opportunity with a stop under 860. And so, since these are buys, let me explain the trend has not changed. It's just too choppy to trade the Nifty.
Okay, got it. Mitesh, morning. Let me come to your stock list as well. What are the names?
Morning, Subi. I also have more of buy calls. So a buy on IndusInd Bank, which after a good decline seems to be giving first signs of a reversal. For the timing, I would recommend a buy with a target of 775 to begin with and a stop at 745. Then a buy on Canara Bank, which made a fresh swing high. So keep a stop at 118, look for a target of 130 here. A buy on Aurobindo Pharma, which after 2-3 days of pullback is giving you a fresh entry point. So keep a stop below 1,090, look for targets of 1,150. And one sell call, that's Godrej Consumer. And the FMCG pack in the last few days has seen price correction. So Godrej Consumer has broken a support line. Sell here with a stop at 1210 for targets of around 1155.
By the way, thank you very much for that, gentlemen. We'll come back to you closer to the opening. The pre-open rates that have come in there are very similar to what the implied open was guiding us towards, which is a lower start. So we're down about 80 points in the pre-open. There's a lot of selling on both large banks and IT, at least in the pre-open session. Infosys, TCS are your culprits. HDFC Bank is also slightly lower. And some of the stocks in news, Swiggy, of course, was one. They've done business restructuring, sold off Instamart to a step-down subsidiary, and then they're getting in almost 2,000 crores from the sale of their stake in Rapido. Stocks up about 2%. More on stocks in a bit, but let's focus on the currency, which was making all kinds of headlines yesterday with the rupee slumping to a fresh all-time low. Now, what are the factors at play? What are dealers saying? Let's go across to Lata for some perspective. Morning, Lata.
Yes, the Tuesday fall was rather large. A 0.5% fall in a single day is not par for the course at all. It is an unusual outlier fall. The reasons are really that there has been a stepped-up selling by funds. We saw that 2,900 crores on Monday. We saw another 3,500 odd crores on Tuesday. So that selling normally translates next day into dollar buying. Now, if yesterday's was about 3,500 crores of equity selling, they would come in and buy dollars today. It usually works T+1, and therefore the pressure is expected to continue. Usually supplies come in. Exporters also bring in dollars at the end of the month to pay their salaries, to make their payments. But the converse also happens. You often see PSU banks going out and buying dollars to make probably month-end payments on behalf of oil companies. We don't know. Actually, the month-end activity is usually very strong. So at the moment, markets are still watching to learn from the market. 89 will be targeted by those who are worried that this equity sales capital outflow is just not stopping. And, people also lost somehow at 88.5 because it was once protected and the trade talks, all those had lifted the sentiment on the rupee. People were actually sitting dollar short at this 88.5 positions. All those people are now scampering and coming in and buying, and people who thought that they could book at imports at a lower price are now coming in and buying because it doesn't look like it will go below 88.5. The stream of bad news, visa or tariffs and lottery off on H1B, all these are only negative sentiment. Even if the remittances are going to be affected only next year, it is negative sentiment. So 89 will be targeted. The expectation in the market is that the Reserve Bank will come roaringly before that and not allow that number to be broken so easily. So expect something like, not as bad as yesterday, but definitely pressure on the currency.
Yeah, I mean, yesterday did seem a little disorderly in that sense, as you said, a 0.5% move, not usual in any given circumstance. Lata, thank you very much for that, and hope we can come back to you for more during the course of the day if we see some action here. Well, let's just shift focus to the power sector now. Sources tell CNBC-TV18 that around 40 gigawatts of renewable energy capacity remains stranded due to lack of power purchase agreements. At the same time, solar output continues to decline amid weak demand. To discuss this and more, we are now joined by Nikhil Negania, Director and Senior Analyst at Bernstein. Nikhil, good morning. Good to have you with us here. Thanks very much. I mean, I guess this is something which has been brewing for a while, and we've been sort of picking this up in conversations. I think we've spoken about this in our earlier chats briefly. So what does this mean for companies under your coverage, Nikhil? Let's just narrow down the focus immediately to that from an investor point of view.
Sure. So this event specifically, if you see renewable, about 40 gigawatts getting re-tendered, there was a challenge that power demand has been soft this year after 3-4 years of strong growth. This year, due to largely rainfall, power demand has been quite soft. August, September, slightly better, 3-4% growth we are seeing YOY. But due to soft power demand and a huge influx of renewable tendering in the last 2 years, there was a group of tenders where PPAs were not getting signed. So now, given the lack of DISCOM interest to sign PPAs due to low power demand and a big pipeline already signed up, these projects or these tenders were not fructifying into PPAs. Now they'll get re-tendered. In terms of the implications of this, there's no stranded asset due to this. No one put any hard capital just on the basis of a tender. Without a PPA, no investments happen. So no impact immediately on earnings of renewable developers, but does impact sort of growth that was expected of them in the next 1 or 2 years on the renewable developers. Just specifically renewable developers are the only ones impacted by this event.
Oh.
For companies and this is a space you've covered and you have been skeptical, the solar module companies and those kinds, right? Cell, module, etc. There's more coming. By the way, our colleague Shireen interviewed Sanjeev Goenka, who's I'm sure you saw. They are setting up, they said, well, in the next 35 days, first capacities come on stream and they have targets of 3 gigawatts each in cell and module, which the group is targeting. So specifically there, Nikhil, is there an impact?
So their near-term impact, no. So as you rightly said, we have been negative on renewables and more positive on consequences of renewables, which is transmission, thermal, battery, etc. So within renewables, as you said, solar manufacturing, near term, it's a phenomenal story for them. The earnings is very strong, largely due to government schemes, especially the PM Surya Ghar scheme, rooftop scheme, and also the PM Kusum scheme for solar pumps. So those are the ones which are aiding their earnings. So we think FY26 and even possibly decent part of FY27, those companies will see strong earnings. But beyond that, we are really concerned. We see a glut of supply coming. Almost as you said, many people are lining up for IPOs. Every second company we are meeting is looking to set up a solar module and cell manufacturing plant. And that's when we are concerned from a long-term perspective, medium to long-term perspective, that there could be a supply glut and earnings, the ROEs could fall and earnings could compress. So these companies are at peak earnings right now, peak ROE, peak margins due to government schemes. So near-term strong, but medium-term, we are quite concerned.
Nikhil, I can tell you this. When this news popped up yesterday over the last 24 hours, you're the first person I thought of. Because when you read that headline that, it's 40 gigawatts of capacity stranded and no one signing PPAs, I was just thinking about, the thesis you've been building very consistently and you have raised those issues over the past many, many months now. So going back to that first point, now do you think that this is a short-term issue because this year power demand was low and we had a plentiful monsoon, etc.? Or is this a bigger structural issue? And therefore, what would you expect on both wind and solar tariffs as this huge amount of capacity? It's not like 1 gigawatts here or there, right? It's 40 gigawatts which needs to come up for rebidding now.
Yeah, it's a near-term issue, but medium to long-term, the heart of the sector is power demand, where we are positive. Because if you look at the new use cases of power emerging in EVs, the cooling need, data centers, power demand growth will accelerate. This year was an aberration in power demand. It should come back to 1x of real GDP. And once power demand comes back, we need to add renewables. There is no doubt about that. The only difference in our view is instead of government aspiration to add about 40, 50 gigawatts of renewable a year, we feel 30 to 35 gigawatt is what is more realistic in terms of renewable capacity addition. So we should hit that number in the medium term. But yeah, near term, some of the headwinds are there in contract signing due to low demand and massive.
Okay, and this is happening at a time when there is a lot of talk around nuclear as well, right? Scale up of nuclear. We've seen NTPC starting to make some overtures on that side as well. So again, in the near term, this PPA situation, could it get worse before it gets better? And from a stock perspective, then, which are the stocks which we should watch out for? I mean, you've already mentioned that I think a lot of the renewables you're not very bullish on. But could this be an overhang overall on power stocks in the near term?
So on the first point you mentioned, nuclear, an excellent long-term story we feel to complement renewables. Renewables are not dispatchable. With batteries to some extent they are. But you need either thermal or nuclear to complement renewables. I did visit a nuclear plant in India recently, and it's probably the most efficient way man has made power, is what I feel. Very low land footprint, very low emissions. So nuclear will be a long-term story. But it won't impact the near-term PPA per se. To make a nuclear plant, it takes 10 years. So even if we start work today, it's probably going to come in 2032, 35 is when the nuclear assets will start coming. And lastly, in terms of stocks, as you said, within our coverage, we continue to like L&T from a power construction perspective. We like NTPC, which is complementary. So it's a thermal plus nuclear plus renewable play. Where we are negative on some renewable developers, where we find the valuations rich. We are negative on solar manufacturing companies, such as Premier and Wari, due to the supply glut that we envisage.
Okay, yeah, and those calls have been fairly consistent, I guess, over the past many months now. Thank you for that, Nikhil. Good conversation and good to get that perspective. So, yeah, let's see. We need to figure out what happens to these PPAs which are not getting signed in the renewable space. Perhaps it will get resolved in the rebids. The pre-open is settled. It's not looking at actually that bad. I mean, it's 60 points lower, slightly better off. Let's quickly get to our technical experts for some final calls. Sudarshan, what stock will you go with?
I'll go with Hind Petro, buy with a stop under 480.
Okay, so buy on Hind Petro. And Mitesh, your stock?
Yeah. I'll go with the buy on... Sorry, excuse me. I'll go with the buy on Canara Bank for targets of 1.
Okay. All right, got that, gentlemen. Thanks very much. Let's quickly hop across back to Sud. Maruti has been a stock in sharp focus. The company has been sounding very, very optimistic after, I don't know, quarters, maybe years. So let's revisit some of the broker calls on the stock.
So after yesterday's outperformance, today also Maruti can be in the focus today. Goldman Sachs has come out with a note and has upgraded the stock to buy and has the highest target price on the street, and target price is rupees 18,900 per share. And it has mentioned some of the factors. First, potential pickup in the entry-level segment. Remember, Maruti had announced price cut, and the biggest cut was announced for the entry-level segment, where price cut was up to rupees 1.30 lakh. Second factor, it has mentioned that company has resumed new launches after a gap of nearly 3 years, and recently it has launched Victoris SUV and also e-Vitara. And third, as far as emission risks are concerned, compared to peers, it's like it will be a less risk for Maruti. And now it expects 5%, 12%, 9% volume growth for Maruti in FY 26, 27, 28. And it's likely to be higher than what industry might see a growth. And because of all these factors, it has raised EPS estimate for FY 26, 28 by up to 12%.
All right. So thank you very much for that. Just about a minute to go for the market open. And we can then start to look at prices as they start to come up on your screens. What do we have? A couple of seconds, actually. The Nifty will come up. Nifty Bang, mid and small cap indices. Then we'll get down to individual stocks. The opening is, the indicative is about a 60-odd point lower start. What do we have? So 25,150, 25,140, it's about 0.12% lower. Nifty Bank is down about 0.09, so nothing very much at start. The mid-cap index is flattish. The small-cap index is up about 0.14% or so as well. So, yeah. So stocks are still opening. So you just had about 900, 800 stocks on advances and declines. And I think we should be able to look at it in about a minute, 2 minutes to get a better sense. More down than up, but nothing overwhelming in that sense. Bharati, Tech M, Adani on one side, Trent, SBI, Adani Ports on the other side is what you had. Remember, the Adani Group stocks all had a massive run from last Friday Friday, Monday, big move. Yesterday, of course, they all pulled back between 3 and 4%. So keep an eye out on that as well. But this is the open, about a 50 or 55 point lower start. And we're, within the first 1 minute of market open. Survi.
Okay, so 57 down. Let's see what all is down. Hero Moto, Bajaj Auto, Aisha, Tata Motors. So basically, auto is cooling off. Let's see where Maruti is. Maruti is actually bucking the trend. There's a little bit of a green on Maruti, about 30 to 35 rupees up on Maruti right now, thanks to the broker calls. Some of the bigger banks are weak. ICICI Bank, Axis, both on the lower side, losing about 0.5% to about 0.7%. HDFC Bank also slightly lower. So banks on the lower side as well. Then what else is correcting? Bharti Airtel, L&T, Tata Steel is on the lower side. There's some profit taking on Eternal as well this morning. Titan is lower. So it's actually, a clutch of different sectors. The outliers on the upside would be Trent. Trent is seeing some traction, 1.3% up on Trent right now. There's Asian Paints, which is managing 0.5% of an up move. And SBI is bucking the overall banking weakness. Most of your private sector banks are lower today. SBI up about 0.7%. But yeah, the Nifty is still nursing a cut of around 70 points, Nigel.
Well, that's right. A few stocks that are actually calling for special attention in today's trading session. You have Minda Corp. They've released their vision for 2030. They're looking at scaling the revenues by around 3.5 times. They're talking about margin improvement. They're talking about the net debt to equity number to decline to 0.3 from around 0.6. And ROCE to move up from 20% to 25%. Street likes their vision. Execution is going to be important. Motilal Oswal, they have come out with a note on Lotus Developers. They have a target price of around 250 rupees. The street likes that. They're finding that note, of good consequence. In fact, they see good rationale, it seems. For the time being, the stock on large volumes is up. Lotus Developers is the stock that we're talking about. So that comes up for you on the screen. A couple of other names. Wheels India, we saw a large trade out there. So the stock is up 7.5% higher. One of my colleagues had pointed that out. Dilip Bilkon, good news coming in there. That stock is up close to around 3%. And Borosil Limited, that one as well is up and about in today's trading session, up close to around 5%. Bajaj Consumer, I'm not sure what's gone on there, whether there is some kind of a corporate action or it's gone X something. We'll have to keep an eye on that. Stock is down close to around 6% as we speak. So that's one notable loser in today's trade. And Ashok Leyland as well, after seeing good buying yesterday, falling on decent volumes, down 3%.
All right. I think that's basically what we have as far as market open is concerned. We'll have more coming up as we go along. So Nifty at about 25,100. We're down about, 66 odd points. And just sort of settling down. More action in just a bit. Gautam Shah is founder of Goldilocks Global Research. He's with us now. Gautam, good morning. Great to have you with us here. Thank you very much for joining us. I'm not sure, were we stock when we were in the midst of this 1,000-point move, Gautam? Or I think we spoke before, right? So how do you assess prospects now? Still in a range, at the cusp of a bigger move, or back down once again from the upper end? What's your sense?
Good morning, Prashant. Well, I think we spoke at the starting of this 1,000-point move, and it was a time wherein we were going through the perfect storm with just about everything against the Indian market rally. But the way markets have reacted to the Trump tariffs and all other negatives that we have been dealing with, I think is quite commendable. And it is fair to say that domestic liquidity has won over once again. People still question valuations. People still question, whether our markets are good enough to actually scale back to previous highs, because most other markets in the world are actually trading at lifetime highs and beyond. But I think I'm quite encouraged with what has happened in the last 2 weeks. I think the screen has looked good. It's been very vibrant. There is widespread participation. A lot of stocks which were underperforming for a long period of time have come back really well. And I think what's happened in the last few days is just a cool off after that 1,000-point rally. So 25,070 and then 24,900 in my book would be the first supports. I think this market is now a buy on dip. And from around these support levels, we should possibly see a turn, taking the Nifty back to 25,500, which I think is now the key level. And once we are past 25,500, I think we should be preparing ourselves for lifetime highs. So I think the setup looks pretty good. Stay in the right pocket, stay in the right stocks. Don't look at the Nifty too much, and I think we should be sorted.
Don't look at the Nifty too much. Actually, yeah, the Nifty did manage to climb above 25,000. So maybe higher levels ahead, got that point. Gautam, so if not the Nifty, then where else should we look? Do you see any emerging trends? Let's start with the market's favorite trend, over the last 1.5, 2 months, which is consumer and auto, do they look good for more?
Well, firstly, Surabhi, I think over the last 5 years, we've seen a lot of market cap rotation. So when the Nifty does not do well, people are a little discouraged that, markets are not running up the way they used to, but then they can't keep running up given our levels and given our valuations. So I think the large caps have taken a bit of a backseat. I mean, just a case in point, what Bajaj Finance has done versus Asian Paints. I think that's just the writing on the wall that if you are in the right pocket, there is clearly outperformance. So I think given that, there are some new leaders which have really emerged in the recent past, auto being one of them. In fact, I spoke about it in our last interaction. The auto index, as we speak, is near lifetime highs. And I think the news flow around GST has clearly been the trigger for the same, which I'm not surprised at all. It's a big one. And I think it's going to see much bigger upside. So I think 27,700 was our working target. We got close to it. But I think over the medium term, you could even see a 30,000 on the auto index because standalone stock setups continue to look positive. On the other hand, people thought that FMCG will start doing well because of the GST trigger and all of that. That's not worked. FMCG has been one of the biggest underperformers of the last 3 weeks. And in my book, it is still an avoid. So stick to auto, stick to metal, stick to banking. Those three are our top picks.
Okay, all right. Hi, Gautam. Good to see you. Let's take a break from the equity markets. What about gold? Where is that one headed? $3,800. Wow, what a move out there. Where is that headed?
Well, it's left everyone behind and every asset class behind, isn't it? In the last 18 months, I remember I was at a CMT summit a year and a half back, and it was at 1800, and all global strategists were discussing whether S&P or gold. Clearly, gold has won, and I think it's going to keep winning. I think 3850 is an important near-term resistance. I don't think these are levels to buy, but this is a structural mega trend which is going to continue over the next 3 to 6 months. So if somebody is long from lower levels, please stay invested. But more than gold, as I've said in all my recent interactions, I think the bigger opportunity is silver. As we speak, we are at $44 international prices, and I think there is another 20% upside very easily towards $50 and beyond. So stay invested. I don't think there is a case to book profits in precious metals and move to equities.
Gautam, that's an important point. Those who are already invested, it's like one of those stocks which has gone from 100 to 1,000. And it's still looking good, but then how do you buy it? $1,000 now, right? Even though the structure, etc., looks good. I have a friend who keeps talking about gold, right? Has been talking about gold for a while. But yeah, it's one of those things, Gautam. I mean, I think we've spoken about. We've been talking for at least 15 years now. Global financial crisis, currency debasement, and how gold is this new thing. But nothing happened. $1,000 in 2008, but then it suddenly moves, right? 1,000 to 2,000, it took 12 years. And from 2020, it's almost doubled in 5 years. It's like any other asset class. You can never time it, although the drivers were there even back then. Sorry, go on.
Well, you don't tell a technical analyst you can't time it all the time. And I think what happened over 7 years, I think, is the hard work that gold put in that period, where everything was in place in terms of fundamentals for it to do well. And the kind of geopolitical environment that we live in now, it's very easy to actually build a case for gold. And the industrial use argument for silver, I think, is really big. So while gold has done very well over the last 18 months, I think the next 12 to 18 months will still belong to silver.
Yeah, that's an interesting one. वो नहीं लिया तो silver में chance है, right? I mean, I think let's see. But point taken, Gautam.
But I was looking at some sobering stats, and everybody does this, right? India versus the rest of the world. So if you look at India versus the MSCI All World Index, and I'm just checking my numbers again. Year to date, we're down 16%, which is fine. I mean, you can't be outperforming every year. But the bigger worry is that in dollar terms, we have underperformed that index by 37 percentage points. So, there is that question of, what next? And I think a lot of investors here are very savvy now, Gautam. So therefore, they're wondering silver or gold, and they're wondering whether buy this dip on the NASDAQ or, go and buy, China stocks because you have a bigger tech play over there. So let's broaden the conversation. The US market itself, do you see it continuing its winning ways? The Fed chief thinks it's overvalued, but what are the charts saying?
There was so much debate in the US markets about debt and inflation and Trump's policies. valuations and whether AI has been discounted to a greater extent. And a lot of people stayed out thinking that this is a bubble, this cannot sustain. But the US markets have done fabulously well. And we've been tracking it very closely over the last 6 to 8 months since we now have a product. And I'm amazed to see the kind of moves that US markets are seeing. There are still no signs of topping out. My working target on the S&P 500 is 6960. I think the NASDAQ can do another 10-12%. And many of the top stocks are still very well placed. So if the mother market is still in a strong bull market and many other markets in Asia and Europe are still trading at lifetime highs and doing well, I mean, the case which I made last time, India will have to join the party. The world will not join India's underperformance. India will have to join the world equity market, bull market, which is playing out. But the key point is, India versus the world. Yes, we've underperformed, but from a nifty perspective. But if you are in the right stocks, in the mid caps, in the small caps, I mean, look at an Eternal, just a case in point. It's at 335 today. I mean, what an incredible run that stock has seen. There are many such big winners which are in the making right now. So I don't think the top 100 is going to do anything in the next 6 to 12 months. So the Nifty might not give great returns, but the mid cap, small cap, because the domestic money is actually now going seriously there, I think is where the real opportunity is.
No, absolutely. I couldn't, agree with you more and take your point. And why mid cap, small cap? You gave the example of one large cap, Eternal. Look at a stock like Maruti. Like, who doesn't know Maruti, right? And that stock is up 50%. So if you're in the right stock, then it's a very different market for you. So give us some more clues, some names. I don't know, you don't usually talk stocks, but some idea where the structures are looking, really promising at this point in time. Maybe some individual names or some hints around sectors, if not stocks.
See, I think last time I spoke about auto, that's already played out. I think the top stocks have done very well. I don't think they're a buy at current prices, but I still feel that metals is the next big opportunity. I do know a lot of my fundamental friends who are not able to join the dots and build a fundamental case for metals. But look at what top metal stocks have done. JSW Steel, Hindalco, Tata Steel, SAIL, Nalco. Not recommendation, but I think some of these stocks are trading near lifetime highs and still very strong on the charts. So from somewhere around 10,000, which is where the NSE Metals Index is, I wouldn't be surprised if you get a 25% move on that index. So I think metals is really the next big opportunity, which I've maintained for a while, and I think that's going to continue. Banking, I think, is going to do well and possibly start moving towards levels of 57,500, led by the PSU banks. I think I love the setup of some of the top PSU banks, and I think they are likely to be big winners. And the dark horse sector, which not many people are talking about right now, is the comeback of PSU stocks. They were in a mega trend, went into a consolidation for a year. Everybody gave up on it. Valuations are comfortable, nothing to do with foreign policy. And I think they are under-owned in some sense. So I think PSU could also be the next big opportunity over the next 1 year.
PSU as in only the PSU banks, or overall you expect the CPSE universe to start firing up?
I think PSU banks will outperform for sure within the entire PSE basket, but the entire PSE basket is also likely to do well. So if somebody wants to just look at an ETF and just participate on the index, it might be a good idea.
Yeah, no, it's taken a nice break, right? Last couple of years, the PSU Bank Index. By the way, you mentioned steel, Gautam, right? And you're talking charts and price action. We have the fundamental view coming in on steel in just a bit from now. So we have the Steel Secretary, Government of India, joining us shortly, Mr. Poundrick will be able to sort of explain to us where the government sees, because it's an industry with a lot of government focus. It's a fundamental building blocks industry, and I think it's a conversation you don't want to miss. Coming up in just a bit from now. Anything else, Gautam, before we wrap up? Any other single stock ideas?
No, I think the point is stay concentrated. I mean, don't do too much. I think that's really the key takeaway, because we've seen what's happened with IT, we've seen what's happened with FMCG and pharma, capital goods, all underperforming. Don't commit where there is no relative strength. I think that's the key takeaway. Stay where there is a quality strength and reasonable valuations, and I think we should be good.
All right, we'll leave it there. Gautam, thank you very much for joining us. Really appreciate your time here on CNBC-TV18. And look forward to the next one. We're done about what? I think the Nifty should come up on your screen, and we'll just take a quick look at it and sort of move on from there. 100 points clean. 25,067 is where we are starting this morning as far as prices are concerned, and the Bank Nifty, mid cap, small cap indices that have come up, and maybe we just sort of run through the auto, financials, and the metals indices as well. Metals perked up second half. Autos did quite well. There are, of course, a couple of brokerage calls as well for auto. Financials on your screen, metals and auto next. Metal index is down about a quarter, so not moving too much. And steel there in particular is the one that I'm talking about. And of course, the auto stocks, which have had a bit of a move, down about 0.75% at this point. Just the rupee as well, the dollar rupee, and where we are at. So, sharp move yesterday. Lata, of course, in the morning was with us, 88.71. So it's absolutely kind of sort of on an even keel this morning, not very much by way of a change. Minda Corp is what we want to put the spotlight on once again. Sud is here with us to do exactly that. Sud, over to you.
So in the opening hour of trade, stock has risen as much as 10%. Currently, it's trading with a gain of nearly 8%. And this has come after companies released Vision 2030 document in which it has set some ambitious target on revenue front. It expects an increase of almost 4 times to rupees 17,500 crore from the current level of 5,100 crore. On the margin front also, it believes that it will increase to 12.5% from the current level of 11.4%. And on net debt to equity ratio, it might decline to 0.3 times from current level of 0.6 times, and on ROCE, it might exceed to 25% from 20%. And on the revenue mix, it believes that the contribution of passenger vehicle will increase to 25% from current level of 14%. But at the same time, for two-wheelers, commercial vehicles and three-wheelers, contribution is going to increase over the next 5 years. What are some of the few growth drivers? First one, the company will focus on premiumization. Second, to increase the kit value. And for both two-wheelers and passenger vehicles, it believes that over the next 3 years, that is by FY28, kit value is likely to double. And third is on export front, it's targeting 37% CAGR over next 5 years versus 18% that company has seen from FY21 to 25. And lastly, in the recent past, it has signed some of the few JVs from Japanese companies and Chinese companies, and it believes that those also will aid the growth going forward.
Okay, all right. So that's in the last few years, I think the management has spoken only to our channel. Recall, the stock was a third of what it is today, but now they've come out with their big vision. So hopefully they rejoin on the channel and give us what's the trajectory from here on. At that point of time, the stock was around 200 rupees when they spoke to us last. Moving across to Upasana, she's here to tell us about Bajaj Electricals. Upasana?
Good morning. So the board has given a consent to acquire Morphy Richards brand and intellectual property rights in India and across neighboring region from Glen Electric Limited for a consideration of nearly about 146 crores. Now, mind you that the company has been manufacturing and marketing Morphy Richards products since April 2002 in India, positioning it in the premium home appliances category. So this strategic move is expected to strengthen its position in the home appliances and consumer electronics portfolio. So overall, it certainly bodes well for the company as company gets the brand rights in the South Asia markets such as Nepal, Bangladesh, Maldives, etc. So we can certainly see the stock surging higher in trade today.
Okay, all right. Thanks a lot for that, Upasana. But as promised, let's focus on the fairest pack. We have Mr. Sandeep Podrik, the Secretary of Ministry of Steel, who joins us on the show. Hi, sir. Good morning. Good to see you win. And kudos to you as well as the team. Has protected the domestic steel industry from all that's going out in the globe and, in fact, the uncertainties that we're seeing on the trade front as well. That said, I wanted your opinion on a couple of factors. One is, will GST 2.0 spur further demand for the steel sector? If you could give us your quick comment on that. And demand could be relatively impacted because of relatively lower spends coming in from the government, maybe lower demand from the government. But do you see green shoots coming up post-Diwali?
So, thank you and good morning. Let us start with the impact of GST on the steel sector. We see that the consumption is likely to grow with the change in GST, the GST reforms. And primarily, 4 sectors, in our opinion, will impact the consumption of steel and increase the consumption of steel. First is the construction sector, because as you know, the cement GST has been reduced. So that will incentivize or encourage more construction, and steel is one of the important factors or inputs in construction. So that should increase consumption. Second is automobile. Again, most of the automobiles or autos have been brought into lower GST band. So that should incentivize more steel consumption there. Household consumer durables like refrigerators, ACs, again, lower GST, more production, more consumption of steel. And one more thing which should, so that's on the consumption side. There are more sectors which will incentivize more consumption. So we are expecting that in coming months, the steel consumption will grow. We should also take into account the fact that we are the only major economy in the world where steel consumption is growing in double digits.
Yeah.
For last 3 years, we are growing at 12%. And in the first almost half, April to August of this financial year, we have grown more than 8% in terms of consumption. So I see an optimistic scenario for steel consumption because of GST reforms. And I also see that as the rainy season ends, we should see more consumption in steel and more demand coming from all sectors.
Okay.
So I will presume that the steel sector will continue to show robust growth on the consumption side.
Got it. And for the year, sir, we should be working with what, high single-digit growth?
So as I said, till now it's 8% for April to August, but I would dare say that because of GST reforms and because of the coming construction season coming, we should be somewhere around 9 to 10% at least in the consumption growth.
Mr. Pandrik, sir, thank you so much for being with us this morning. Surabhi here. I just had a question around how you're observing moves in China and their implications for the Indian steel sector. Now, there's already, a safeguard duty that has been announced. But a lot is going on in China, and there's a lot of talk of this so-called anti-involution policy. They're trying to set their house in order, reduce disruptive price wars. What is your reading of the situation? Are you anticipating more Chinese steel in global markets, including India? Or do you think the safeguard duty is adequate? And right now, the Indian steel sector is well protected?
So you are right. A lot of steel is coming into the international market. And there's an article you must have seen today which talks about a lot of exports from China to other countries. But as far as steel is concerned, if you see the present year data, the imports from China have reduced significantly as compared to last year. That may be due to safeguard duty, provisional safeguard duty, which has been imposed by the government. And as DGTR has recommended to continue the safeguard duty, I would presume that domestic steel sector should get reasonable price and should not be affected because of the cheap or substandard imports.
Okay.
Also, there are some anti-dumping investigations going on. And DGTR has already recommended imposition of anti-dumping duties on 2 categories of products, one from China, one from Vietnam. So all inclusive, that's safeguard duty, anti-dumping duties after DGTR recommendations and after the process. I would say that domestic steel sector should not be adversely impacted because of cheap or substandard steel imports. I don't see that as a possibility, at least in the near term.
Right, absolutely. Mr. Pandrik, hi, good morning. Prashant here, and good to see you, sir, always. Provides a really high-level guidance on the industry going forward. Just a quick word, Mr. Pandrik, on on exactly that point. The expectation is, and this is, of course, from a financial market standpoint, that everything from refined products to steel to chemicals out of China, which is the largest maker of all this stuff, is going to reduce because, this anti-involution, which my colleague pointed out, basically race to the bottom. So they want to prevent a race to the bottom in terms of pricing. So they are shutting off old capacities and many such measures, basically. Of course, it will take time for all of this to show up. So basically lesser Chinese exports into the world for everything, including steel. So that is one. So could that, in your opinion, if you've looked at this issue, provide a slightly more structural uplift to prices everywhere? And second, sir, the rupee here against the dollar has, sharply depreciated. It's down 3.5% year to date. So I just wanted to get a sense if you've got an eye on that as well. And any thoughts there? Yeah.
Yeah. Let me talk about the overall import-export scenario and the impact of measures taken by the government. So if you see our exports in this financial year from April to August have in fact increased about 16% as compared to same period for the last year. And our imports have reduced 32%. So while our imports and exports both are not a big chunk of our total domestic consumption or domestic production, they have an impact on the pricing scenario because cheaper imports or whatever imports are happening, they have an impact on domestic pricing, what we may call a benchmarking of the domestic pricing. And if cheap imports come, then the domestic prices go down significantly. If we see the pricing scenario for domestic steel for last maybe 3 years or so, the domestic steel prices have gone down significantly as compared to say 22, 23. But after the safeguard measures by government this year, they have stabilized to some extent, but they are still at a lower level as compared to what they were earlier. On your question about
the currency,
the policy changes in China and the impact on India, I would say that should help the overall steel industry because right now the steel industry in terms of pricing is not very high, means the pricing is at very low level as compared to what they were getting earlier. Any such policy changes should help the industry, and that's also important because we have to invest in the steel sector to cater to the domestic consumption growth. We are targeting at 300 million ton by 2030. On the dollar rupee, yes, that will obviously have an impact, but impact in both in terms of raw material imports because we import substantial part of coking coal, so a change there will help, depreciation will help. As we don't have much exports, that impact I don't see because our overall exports were only 4.5 million tons last year as compared to total production of 152 million tons. But on the raw material side, that may have more impact on the steel sector.
Mr. Pondrik, just a point. Now, taking what you said, all of it put together, you're saying, first of all, there's no reason to worry about any major China import surging. The safeguard duties will take care of it and the anti-dumping duties. That coupled with what you just told Nigel, that the demand is looking good, GST is looking very, very good. So the stock market seems to be expecting a price increase. I mean, if you go by some of the brokerage reports, etc. So are those hopes well placed? Would you also expect some price increases in the coming months?
I would not like to comment on the stock market trends. I can say that the steel sector,
steel prices,
as far as we are concerned, so that's what I'm saying. So that is looking good. I am optimistic that steel prices should, because of the increasing consumption and reducing imports, the prices of steel should balance now in coming months, and the industry should show more returns in terms of revenue and everything. But that's the steel sector per se I'm talking about. So I am optimistic about the steel sector in the country.
Right, Mr. Pondrik. In fact, we had put out a piece yesterday that the domestic makers, they have a good argument to go ahead and increase pricing because consumption will increase. We're at a big discount in comparison to Chinese prices as well as FTA countries' prices. And we're getting into the seasonally stronger period post the monsoon. So let's keep that aside. Just a quick word on the final decision with regard to the safeguard duty from the Finance Ministry. When is that expected, if you could tell us, on steel? And is there a possibility of some anti-dumping duty on stainless steel imports as well?
So the safeguard duty, the provisional duty is applicable till I think first week of November, 6th or 8th of November. So a final decision should be taken before that for continuing the safeguard duty. Means that issue should be finalized before that, I would presume. And on the anti-dumping duty on stainless steel, there is a investigation going on by DGTR. So as soon as the DGTR reports comes in, government will take a decision based on that report. That investigation is still under process.
So we should expect that in the next couple of months?
Normally they take a few months, 3 to 4 months.
Okay, so on stainless steel, there's an investigation. We'll wait to hear from you all. Let's talk about RINL. The last time you joined us, you were telling us that the pending dues are gradually coming down. They've fired up a couple of their furnaces. And the dues actually were to a listed company, which is NMDC. So the street would like to understand what is the pending dues from RINL? How much was it? How much has it come down to?
So RINL, as you know, last year they were in pretty bad shape. Yes. They had total dues of about 35,000 crores, both means roughly half to the banks and roughly half to the private creditors, including NMDC. Now, after the government's package, they have improved substantially. They are running now all their 3 blast furnaces. Roughly, I would say 75 to 80% capacity, which they have never done in the past on a sustainable basis. So operationally, they are doing pretty good. On the finance side, they have reduced significantly their banking loans, banking liabilities, which in turn means that their interest rates have come down for borrowings from the banks.
Okay.
They have started paying back the private creditors too, including NMDC. And I would presume it will take some time. We should understand that their financial position was so precarious that it will take some time for them to totally balance out. But I would say they are in much better position as compared to last year overall financially.
Yeah, if they're paying their dues, then it's good news for NMDC as well, because otherwise there was outstanding in terms of a receivable. Final question, sir. If you have any kind of sneak peek, things are looking up for the steel sector. NMDC Steel, will it get divested in the remainder of this year? They've turned around things quite a bit. Utilization levels have moved up. So quick comment on that. And what about SAIL? If things are going to improve, could we see an OFS coming in?
So NSL, yes, you're right. They have significantly improved their performance. In fact, in last 1 year, they have almost reached now almost 100% capacity utilization on the hot metal side and roughly 80 to 90% capacity utilization on the mill side. So they have improved significantly. On the divestment issue, the decision of the government still stands. As you know, there is a cabinet decision that NSL will be divested. So that decision still stands. How fast it will move, I would not like to means it's not Ministry of Steel which undertakes the process. So that's for the DPUM. They can comment on that. On SAIL, yes, they are doing good. One thing which about SAIL that now they are focusing on mining too. They are in fact the second biggest miner of the country of iron ore, and now this year they have been given a target to also sell iron ore in the market and increase their iron ore production significantly. So both on the iron ore side, mining side and steel side, I would think that SAIL will improve and show significantly better results. They are also planning a lot of expansion. So I would say that in this year, they should finalize decisions on those capacity expansions.
Okay, interesting to see if things are looking up, whether there is some OFS that will be due. But we appreciate you joining in, sir. You're sounding optimistic on the prospects. Maybe the domestic steel consumption could grow by around 9 to around 10%. The ingredients are in place, and the government of India has put in some good protection measures, which saves us from what's going on the global uncertainty front. Thanks a lot for joining in. Well, on that note, we'll slip into a short break. On the other side, we have Kamlesh Jain, the CMD of Jain Resource Recycling, who will be joining in to talk about their 1,250 crore rupee IPO that opens up. Stay with us.
Welcome back. Well, as promised, let's get to the conversation around a new IPO, another company coming to the street. Jain Resource Recycling is coming out with an issue, which is about 1,250 crore rupees. The IPO is opening out for subscriptions today. Kamlesh Jain, Chairman and Managing Director at Jain Resource Recycling, is with us. Mr. Jain, thanks for joining in. So we want to, of course, understand the company a little better, and we have 3 key talking points. Let me lay them out for our viewers. Of course, we want to understand the purpose behind the fundraising capacity, the fundraising activity, your current capacity utilization and the scalability of the business, and of course, what you see ahead for your margins. So let me start by telling our viewers that this IPO is a mix of an OFS as well as a fresh issue. The offer for sale component is slightly larger at 750 crores. Fresh issue is 500 crores. That's the money going towards the company. So tell us, sir, this 500 crores, what's the utilization? Why did you feel the need to come to the market?
So good morning. So we, out of this 500 crores utilization, we are going around 375 crores will be paying to clear our debts, and around 125 crores will be general purpose in the company.
Okay. So, all right, got that. So you will be paring down some debt. Let's also focus on what the company does. And Nigel has been explaining this to us. So basically, you are into the recycling segment in the non-ferrous space. So tell us what your further expansion plans are. I know you can't give very specific numbers, but what is your current capacity utilization? How are you planning to scale up the business? Do you have some clear capex plans ahead?
Yeah, so we have current capacity around 3 lakh tons of non-ferrous metals recycling, out of which I feel we'll be utilizing around 70 to 75% capacity utilization. And we have expansion plan for copper product, mainly for copper cathodes, copper wire rods, and bus bar, and other value chain. So the expansion will be the money come from expansion will be, internal accruals only. And the balance 500 crores which I will explain for going for in the company. Company is going to, yeah.
Okay, got that, sir. Good to have you on the show, Mr. Jain. This is Nigel on this side. Quick couple of questions then. You said 375 crores will be the debt reduction. So assuming that interest cost will get saved will be roughly around 40 crores, 35 to 40 crores. That would be a fair assumption, right?
Yeah, approximately you're right, around that percent for the bank CCLP, they're going to reduce it. So we'll save the 40 crores.
And post this repayment, what will the debt number come down to?
What was the question?
Post the repayment of 375 crores, what does the net debt come down to?
The net debt compound to will be around 500 crores.
It will come down to 500 crores. So currently you're saying it's around 875 crores. Post this repayment, it comes down to 500 crores. You got that, right? Yes. Okay. All right. Tell us how the revenue mix will look. As you're saying, the focus is going to be on copper for further expansion from here on. Currently, it's broken up into lead, copper, as well as aluminium. So what is the ideal revenue mix you're looking at? And also in terms of capacity from 3 lakh tons, if I got that number correct, where is that number headed, say in the next 2 years?
So out of the revenue mix, you're saying we are majorly doing copper, which is around 45 to 50% around copper. And the balance is around 40% lead, and the rest is aluminum and plastic. And our focus, of course, on expansion of the copper. And in the future, we'll be expanding more in copper, which I have explained to you. And the revenue will be going up more for copper. And I think it will reach to 60% of total revenue will be copper.
Brilliant. All right. So we got that in place as well. Could you tell us what is your target in terms of market share? We have some brief numbers for every segment, but you must be having some target in mind. So if you could help us out with that number. And since we're talking about your revenue mix, exports have been gradually going up. What is the targeted domestic export mix you're looking at?
So we are looking around 60% exports. What is the last year performance we have? So we are planning to go more for export side, of course. And domestic market is growing as India is growing very fast. So we also have a lot of requirement of copper and other metals in domestic market also. And my focus more will be on to grow the export because we are sitting in a port which is in Southeast Asia and the freight is very negligible to all those countries. We export to Japan, Korea, Singapore, China, and many other countries in Southeast Asia. And the freight to these countries are very marginal from Chennai port. That gives a cost advantage to us for exporting more material than selling domestically.
Mr. Jain, good to have you with us here and good luck with the IPO. Just a quick word, you know, FY25 over 24, there seems to be dramatic improvement in numbers. You know, revenues are up 60%.
Yes, you're right. So what happened in our business of recycling, we have to source more and more. Sourcing is the key point in our business of recycling. We can sell as much as possible. There's a thing called order book here. It's only purchase book. So our sourcing gone up in last 2 years because of the global sourcing, and we have increased the team network in many part of the Western countries, mainly US and other part of the South America. And because of this, the lot of the cultural shift and the technological changes and the technological disturbance, a lot of products become dismantled, and that's why our sourcing is going more and more up. And we already have enough capacity. We always keep 20% capacity spare to get more raw material. That is why the revenue is going up because of this more sourcing of raw material.
So just a quick question. Capacity is around 140,000 right now?
No, it is around 3 lakh ton total for including lead, copper, aluminium, including everything. And we are utilizing around 75%.
Okay, all right. Okay. Got that out of the way then. Are margins better in exports compared to the domestic business? And also, we have got a listed peer, which is Gravita. There, they are doing relatively better margins, though I think in size you are a little bit bigger. So do you have levers in place to improve your margins from here on?
Yeah, so in the business of recycling, it is about scale. So when you more and higher the scale, lower the cost of production and better EBITDA margin. That is the simple funda of this business. So we have to do more and more sales and increase our production. Now, of course, the peers, the Gravita is not exactly like us. We are 60% in copper and around 30-40% lead. So we are alike to a certain portion, but not 100%. And export margins are better because of the low freight, and it depends on the prices of the LME. So wherever the demand, we sell our product wherever the net landed price to us. When we compare that, based on that, we sell our finished goods to the domestic market or export market.
Okay, all right. So part of this is also an OFS. Do the promoters have any kind of plans to infuse some more money back into the company since business prospects are looking so good?
If company requires, we definitely pump the money more. But I don't think company require the cash because they got enough cash to grow. Okay. And right now the internal accruals are very high. So I don't think company will be requiring extra cash in the business.
Okay, all right. Just a thought, sir. Since there is some money that's going back to the promoter entity and some part of it is going into the company as well. We appreciate you joining in, sir. Debt is going to be coming down drastically. You're sounding optimistic about business. And as you said, the focus is going to be on the copper part of the business from here on. As volumes and value picks up in terms of sales, the margins will improve. We look forward to speaking to you, sir, on listing as well.
Thank you, sir. Thank you very much.
Okay, all right. Well, let's go back to the markets then. We have Vinay Rajani, the Senior Technical and Derivative Analyst of HDFC Securities, who joins us. Hi, Vinay. Thanks a lot for joining in. Markets down 100 points. Buy the dip or not?
Yes, so we have seen 400 points correction from the recent swing high of 25,448. So if I were to see the retracement levels, the Fibonacci retracement levels of the entire 1,000-point rally, which we saw from the level of 24,400 to 25,400 odd level, 38.2% retracement comes in at 25,050, and 20 days exponential moving average for the Nifty is also coinciding around that level, which is placed around 25,400 45. So a couple of evidences which is suggesting a strong support in this range. So yes, I think the way some sectors are still performing well, PSU banks, metals, and some power stocks have started participating in this market. So I think this is an opportunity. I think from this level, considering the strong support from a couple of evidences, it looks like that one can go long from here. I would suggest a stop loss at 100 points lower from this level. So around we can say 24,980 to 25,000 should be the stop loss in trading long position. And overall, we can expect some recovery from this level. So yes, there are many opportunities in the in this particular market. Even in the correction, we can see some stocks performing well. So yes, one can take long bet with a stop loss of 100 points in the Nifty.
Vinay, in terms of specific trades, what would you have?
Yeah, so some stocks are performing very well, like the power stocks have started performing. So NTPC has given a fresh breakout from the consolidation. It looks good on the chart, on the short-term charts. So NTPC can be traded long around 344. I would suggest a stop loss at 338. On the upside, I'm expecting a target of 354. Second pick, I would take from the PSU bank, which is continuously doing well. The Bank of Maharashtra is looking quite good. There has been a downward sloping trend line breakout on the weekly charts, and I think this stock can do well from the mid-cap PSU bank segment. So around 57.41 can go long. I would suggest a stop loss at 56. On the upside, I'm expecting a target of 59.50 next couple of sessions. Thank you.
Got that. Let's... Vinay, thank you very much for joining us. Good speaking with you, and good to have you with us. Well, markets down about 80-odd points. 1,400 stocks are lower on the NSE. About 1,280, 1,290 stocks are higher. So that's where we're looking at as far as market breadth goes. We take a break. We are back. Commodities in focus. Manisha is going to be joining us to help us with that. So stay tuned. Coming up.
Welcome back. Equity markets still dealing with a cut of about 0.25%. Let's find out what's happening in the world of commodities. And we have Manisha joining in with the latest. Manisha, what do you have your eye on this morning?
Well, I'm looking at precious metals, not gold, not silver, but it is platinum, which really seems to be surging in the overnight markets. So even as gold and silver have taken slight pause at those all-time highs, look at what platinum has done. 5% of gains in the overnight market. You have 8% up on a week-on-week basis. It is 12% up on month. It is 67% up in this year. So it has clearly outperformed most of the other commodities. And we're looking at 50% of gains coming in for platinum in the last 12 months as well. So very, very strong gains coming in for platinum there. Well, if you look at the overall markets, as I was telling you, platinum clearly outperforming with 67% of gains. You have silver, which is 53% higher, all-time highs in India and 14-year highs in the international markets. Gold is trading at an all-time high in various countries, but is up 43% for this year. And then you have palladium as well, up 40%. So it clearly belongs to precious metals when you look at 2025 as a year. But I want to focus on platinum right now, because if you look at the global supplies, they are the lowest in last 5 years. We have seen constant deficits continuing into the market, and the weak US dollar has been supportive. And when you look at platinum, the buying also has increased because it's relatively affordable than gold. It's trading at around $1,495 an ounce right now, and gold is at around $3,800. So as you can see, it's nearly half of what gold has been. So clearly the affordability comes in from there. The platinum prices are trading at an 11-year highs, but very far from its all-time highs of $2,166 an ounce. And we are currently trading at around $1,500. So really far away from those all-time highs in case of platinum. But the way the fundamentals really seem to be working clearly are supportive. There is a statement from World Platinum Investment Council which says that after last year's big deficit that we saw into the markets at around 992,000, this year as well could look at 850,000 ounces of a deficit. That clearly has been supportive there. When you look at the platinum uses, while of course it is more of an industrial metal and 45% of usage comes in from automotive, but jewelry as a demand continues to increase as well. So 27% is a hefty number when you look at platinum in sense of jewelry demand. And then you have industrial, 20% comes in from there. Investment seems to be surging as well. 7% of platinum now goes in investment, and hydrogen economy consumes nearly 3%, which also is expected to go higher. With deficit and then demand increasing, platinum perhaps should be on your radar as well.
Why should gold and silver have all the fun, right? Why should platinum be left behind?
Well, that's the state of play. Precious metals, precious commodities getting even more precious by the day. Well, we'll take a quick commercial break here. On the other side, our special segment is the economy. Latha in conversation on the impact of H-1B visa fee hike and the fall in the rupee sharp fall yesterday. Samir Chakrabarti of Citi and Chandresh Jain of BNP Paribas on the other side, joining her in just a bit.